Good afternoon, everyone, and welcome to the PivotBoss monthly market outlook for November 2018. Thank you very much for joining me. Right now, we have Apple earnings is out. I wanted to show a chart here real quickly. Please let me know if you can hear my voice right now. As we begin here, you should be able to hear. Excellent. Awesome. Good to see that you can hear me. Awesome, awesome, awesome. Thank you all very much for joining me here today. And if you cannot hear me, I cannot give instructions, so I will post this little bit here for you, just in case. This is Apple right now. Apple just released earnings. Looks like $7.93 versus $7.50. So Apple beats, but stock falls on weak shipments and guidance. You can see a high of 223 and a big push down. 210 has been the big key level for this one. We'll take a look at it right now, but you know, for those of you that are joining me, thank you so much for being here today. And for those of you that are in the trading room usually, again, thank you very much for spending an extra hour or so here with me today. For those of you who are not in the trading room, thank you so much for joining us. Right now, what we're looking at is Apple. We're trying to see how Apple was going to behave heading into the report. I seem to think that it wasn't going to be a huge savior in this current market because the market has changed its personality here from what it had been. But at the same time, Apple remains relatively bullish compared to the broader market, and as long as it can continue to hold 210 or 205, we have an upward bias. Right now we just pushed up to, what was it, 224s or so? 223.49 was the high right now, and now it's trading 210, 211, which is way back to here. So again, it can drop this low, but is it going to hold? Are we going to see a rejection down in the LVN? Because if this one cannot hold, if it cannot hold the 205, 210 zone overall, we could be looking at a pretty significant correction for this one because it would violate market structure. And so it's been holding above 210s for a while. To break that zone would suggest a return back toward the recent pivot low, which would put you at about 180. And that would be a normal scenario. But if it were just a modest bit of selling pressure, then perhaps we could fill the gap, and that would take you to 190. This is where they had the big gap from the last earnings, which was August 1st. The reaction was August 1st. The earnings were on the 31st. And we had a big rally here. So again, that's a key level. Right now we're at 211.29. So giving up today's rally and pushing back. Again, with something like this, is it going to spell more market weakness for the broader market? Apple is a big part of some of these indexes here, so it could be a little bit of a drag. If we take a look at the NQ right now, and I'm going to start going through some of these, and look at the intraday chart. Let's go to the intraday here. Here's the NQ reacting to this as well. And again, this is a market that had bounced pretty heavily here over the last few days. And a lot of folks are saying, hey, this could be the opportunity to buy ahead of a year-end rally. But at the same time, the flip side of this is this just another sell the rip opportunity? I've been trying to sound the alarm on that a little bit, that hey, this bounce is nice. I've benefited from the bounce, but at the same time, it's not one of those where I was adding. It wasn't one of those where I was adding much new exposure or adding to any other positions. It was more, you know, I added a couple of small things, but I also added more hedges as well, just in case we were to fail and rotate and retest those recent lows. This is a big step right here, pulling back, and it's now testing 7K. 7K is a big psychological number for this one. It's been a clear pivot in the charts. That's going to be one to watch heading into tomorrow. So right now you can definitely see the NQ is showing some weakness. So let's take a look at this. Let's go from top-down view and let's discuss some of these markets real quick. Number one, we discussed, well, let's start from last month here. because this is a continuation of what we discussed last month. So last month I emailed and put out, you know, some tweets and everything saying, hey, we're going to have a monthly market outlook on October 1st. And in our trading room, we kept looking for signs that there may be rejection and that we could see a decline, a pretty significant decline even, that could take us back down perhaps as low as 7K with a nice stop somewhere in the middle. So we had some key targets where we could have been reached, and it reached those and then some. I mean, this was much bigger than expected. We knew ahead of time that there could be some selling pressure there. We were already seeing signs of it. All of the longs that we had heading into it, I was taken off in the days ahead of the first, and also on the first. I took my last bit of Apple and some of those others off. And then from there, focused on selling. And my biggest one was IYT. That's how I wanted to focus on hitting this. And again, that was a really great move. And then again, there was if for those of you who are in Swing Trade Pro 2.0, the live sessions, we had a lot of great candidates there. This session we had a lot of great sell candidates on the monthly market outlook, and they turned out to be great during those 2 periods of time. Exactly what we needed. This time around, it looks like, at least in the near term, more selling pressure is likely ahead. Obviously, we see some initial selling pressure after Apple, but for those of you who know my book, Secrets of a Pivot Boss, you know that I'm really big on value, and I'm really big on value relationships. And when we're using the pivot range to identify value in this way, you can see that value has shifted way down. That's a lower value relationship in a downtrending market. This is a downtrending market, at least right now. Maybe not long term, but the near term trend is down. You got a pivot high, a pivot low, a lower high, a pivot new low, a lower high, right? And so again, until that trend breaks, the expectation is perhaps another retest of the recent lows. Now, here's the kicker. If price were to pull back some, maybe there would be a rejection, a higher low, and that could lead to a rip back up, maybe back as high as 7,400. But getting back into 7,400 to 7,700 seems like a far stretch as of this point, unless something fundamentally changes in the market structure. That's not quite happening at this moment. Instead, we have a lower value relationship with a rejection happening on day one, price pushing into that zone and then seeing rejection. As of right now, again, we're trading 715s. And so we could continue to trade in here for a couple of days, but if we can't get above 7,100, maybe we head back down. And here's the good news is we're almost done going down. It only needs one good flush, and it would perhaps take out the lows. Some of these indexes are closer than others, and we'll look at some of these ahead. But this one here comes in, you know, 6280, 62 and change. You got this pivot low, just about 6200. We are at the key range high right now, so that's the key range high. And when we first sold off earlier this year and we rejected here, I mentioned it's a buy back to here and then here. The retest was also a buy. Up here it was a failure and a sell back to here and here. Got close on that one. And then we had buys and we've used this range. Well, right now we bounced off that range, we took it offered, and now we're retesting it from below. In most cases, that could be offered for a retest back at the midpoint of the range, followed by what could be a move to the edge of the range. So again, I don't want to be overly bearish, but I go based off of market structure and how this market has been generally operating. Wrong click there. And until price can reestablish acceptance a little higher, this is the ES. We were just looking at the NQ. Until we can reestablish acceptance a little higher, especially, you know, say 7,200 at the very least, you know, this thing is still sideways to down. The long-term trend remains great, though. Look at this is the long-term trend. Now, I love a good weekly chart. Obviously, today is Thursday. Today is Thursday, and we still have another day until this weekly bar finishes. But look at the rejection tail. Look at the signal there. Look at the trend. Just look at that, right? Nice, great trending market. This is the optimum zone here to buy for a squeeze higher. it's the best spot to buy. So in terms of where we are in the chart, it's not a bad spot. Can we maintain these gains by the end of the week? If so, say we just closed right here flat tomorrow and we stay at 70.23.5. Then the next week could be a return back to the midpoint zone. It could be a digestive week, and then it could continue higher. So say price were to come back to this point, boom, and then all of a sudden we could be headed higher over the next 1 to 4 months because of where we are in the chart. Again, do we need to flush a little bit lower? If so, that would be an even bigger buy opportunity back up, because right now this is the distribution that we should be trading. That's the D-shaped profile. That's the D-shaped profile of the entire year. This is not the optimum zone from a value perspective unless you're trending up. This is the best zone down here. If we were to trend down into this LVN and reject, it'd be the best opportunity to return it and push it back toward highs. But right now, given the trend, so overall, it's not a bad spot. We got to see if they can hold these gains. I never like to judge a developing bar before it's done, because again, tomorrow we could easily flush downward from this area. What's it going to take for this thing to turn around? At the very least, I mentioned 7,100, but you got to close above the prior month's midpoint. That's where this thing really changes the bias back up, in that 7,150. 72 would be a market structure level here, but you get the point. It really has an uphill climb right now. So that's the NQ. If we take a look at the ES, very similar here. Again, there's a couple of things that really helped us identify that we were likely going to fail to begin the month of October. And one of those was this level right here. I kept saying 28.78.5 like a parrot over and over in the trading room, it seemed like, every day, all day. Ever since we came into it here, I told our traders at this moment, we can push through that level. We can either even hold above it for a while. But if it can't get any higher than that, that box right there could lead to a major meltdown. And that was the basis of our analysis. And if that was going to be the case, because at the beginning, you know, we didn't have that part to the trade, right? We were only looking at this right here. That's where price was when we were talking about this. And I mentioned the key is up here. If we're rejecting up here, we're likely going to come back and take out those lows. That's where the stop run occurred. And so when we made that call to begin the month of October, the targets were 27.91 and 27.03.75. And then I mentioned if it fails to hold 27.03s, that's where you start bringing in the lower edge of the range between, you know, 25 and 25.75. So do we have another leg down coming? And that's the difficult part right here, because we have bounced, bulls have gotten in, but we're still downtrending. We still have overhead resistance, and if there's any failure to get paid here, these algos are relentless. You're not going to see people hold, because they're just relentless nowadays. It just keeps on going until it's done. So you see usually these things lead to panic selling here. So watch that 42.5. That's going to be very important in the near term. We can get above it a little bit again, the 27.50s, but if there's rejection there, do we go down and retest these lows? I think we could certainly go down some measure, and that's going to tell us about a lot about the next move. Now, here's one more thing. For those of you that have read some of my work way back in the day here, I wrote a piece here that talked about the August effect there and how typically you see a pullback in August. And if you get that pullback in August and you get a strong low off of it, it can usually be a pivot low that you can buy into the end of the year. It's usually my buy into the end of the year bias. Though we didn't get a pullback in August, we got a very strong August. And what I mentioned to our trading room was, when you get a strong August like this and it doesn't get the pullback you're expecting, the October pullback is usually much more significant. And that's what we saw this time around as well. I think I mentioned that in the webinar there as well. It's posted on some of the links at the website, so if you want to rewatch the October webinar, it's definitely one to go back and rewatch. But for the most part, that phenomenon was definitely in effect here. The good news is, after you find a significant low in October, or after this move, it can tend to be a great buying opportunity 3 to 6 months out. So again, have we found that strong pivot low? I wasn't completely convinced having watched this live. This is certainly a strong squeeze. I think if it were going to continue, there might be some sort of accumulation that occurs. So some sort of accumulation phase where maybe we do something like this and then start to rip higher. So every pullback is defended and then a squeeze occurs. That may be an approach here. So something to be watching for, but again, if we cannot get above 42.5, 27.50 pretty soon, it could be significant. All right, so those are a couple of the markets here to watch. I also have been watching RTY here and including it in some of the pre-market analysis. A lot of folks have been asking about this one as well. One of my old favorites. This one has pulled back quite a bit. I actually used it as a counter trend hedge, which is currently underwater, but at the same time it was a hedge against a broader portfolio. And the idea is, on this pullback, again, if we find rejection here in this zone, does it lead to another push downward? I think this is on the cusp. It's very cuspy right now. The entire market is. And this is the point, again, where it either can fail and drop right here like it did before, or this is the zone where it really stretches and now we're retesting 1600 pretty quickly. So it's right at the cusp at the moment. A little bit of a rounded top in the intraday time frame, which would suggest a little bit of downward movement again, but overall this has been very bullish today. It broke through a clear pivot type of day yesterday, and that's usually indicative of more upside. But again, watching to see how price reacts here off of this pivot range. Now, in terms of the broader picture here, these small caps tend to lead, and this one was given us signs early on that it just wasn't happening. And you know, we even discussed it in the room several times. Some of our traders said, hey, you know, do you think this leads to a broader pullback? I mentioned that I think it's still headed higher unless this level right here gives way. So when that level gives way, that's when, you know, everything hits the fan. That's when we got this big move. Because until then, pullbacks over here were okay. That's a good zone. You know, pulling back is fine up to that point, but then a failure there really opened it up. But it started up here. It started with that rounded top. It broke here. That was a failure at the pivot range, and it was just aggressively sold. So this one was first. So if you didn't know that before, it's something that many traders notice a tendency on, that you know, the Russell can be a leading indicator at times, especially signs that the market may roll over. Good news on this one again is that we are near the key range low on this one. It takes one good day down to push you into the bottom of this range, and that could be an amazing area, 1400 zone, for a bear trap and perhaps a return back to value. That would be a high quality trade, and that could be an end of year trade. Again, if we have not found the low, this would be the best buy on the board. It's where most, you know, managers are going to be looking to put a lot of money to work. Is going to be in that zone. So again, that's the area the entire market can be waiting for. A lot of this, as noted in many different sources here, been low volume types of move up. That's just not how you see a bottom take place. I've been waiting to see where we find the bottom here, and every time I look, it just doesn't look like a bottom. It just doesn't look like it. You know those days. You can see it. You can feel it on the intraday. It's relentless. You know when you see it. That doesn't mean that this couldn't turn out to be a bottom. It could certainly continue to squeeze and build absorption and then go. But for right now, these lows don't look super strong. And so, again, I mentioned many times that I'm keeping the powder dry for more weakness, and then to pick it up even cheaper. And that's been a sentiment that's been echoed quite a lot. So if I'm thinking it, many others are. Obviously, on any of these dips, you've got to put some money to work. But at the same time, it's some money. It's not everything. It's not putting the farm out. It's not really putting a big portion out just yet. Down here, that would represent a different scenario. So that's what I'm looking for here in RTY. If this thing cannot get above the 1545s, 1550s pretty soon, we could see the rug pulled out from this one. Bet the farm. Hashtag bet the farm. That's. Let's see. Oh, CL. I wanted to talk CL here. This has been a significant sell-off. It far surpassed what I thought it could do. Again, when we talked about this one in the pre-market report on this day, so you can go back again. These things are all stored at the website. You go to pivotboss.com and you can use the pre-market reports tag. And on this day here, which was October 4th, on that day, price was sitting above 76 in pre-market trading and had a little box. And I mentioned there, if price can't hold 76s, that may lead to a flush back below this level, at which point 75 to 75.27 would then become the absorption point for a move down, and then again it would meet to a move down. But really, I was looking at 69.34 as being the major target, with a shot at maybe seeing 66 to 67. To clean out this all the way down here, that is just incredible. It's incredible. We have not found a strong low in this one either. And it has had a very... this is about as bearish a pattern as you'll see, with a strong top, a big flush, some absorption, another big flush, 2-day flush, more absorption, another 2-day flush, more absorption, another 1-day flush, more absorption, bam. It's just incredible. And Ken says here, every time CL breaks the 200 DMA, it's the start of a major downtrend, he believes. This thing has broken in a way that certainly could happen. If we don't see a bounce off the 72, 75s here, that's the best level right now on the board. 63.41 is this low. That's the pivot low. That's the pivot high right there. That's the range, and that's why up here we were looking to fade. The idea was to fade. Down here is the opposite. Now, once you get to that low and below it, the idea is to fade and to return it back toward highs. That's the primary idea. If that idea doesn't work on the first try, it's probably a done deal, and we've now perhaps broken a trend, or however you want to draw it. Again, trend lines are very subjective, but it looks pretty bearish when you look at it from that lens. This is a big time move. I seem to think, again, that from this pivot low, the primary idea is to watch for rejection over the next day or two. Tomorrow, if we were to drop, say, to 60, 50, and then close back above 62, that would be a huge rejection day. That could be a bookend type of deal where we then bounce back towards 69s. That could be done. And so again, I'm keeping an eye on this for signs of a bottom type of effect, but it's not showing any signs of strong lows. It is getting burnt. And this range has been developing for quite a while now, and eventually you start becoming, closer to the end than you were to the beginning of this range, which means expansion could be ahead. If we just saw a huge markup phase from the 42s, because that's where this thing started. Obviously it started way down below, but the 42s is really where the absorption occurred. This has been a big markup phase. This has been a big distributive phase. You have the failure on the higher high again. If they can't defend this zone, then this distributive phase will lead to a markdown phase, and value is way down at 49.18. You can see right here that this is all very thin in the profile compared to the bigger bulge over here. I mean, again, do we need to go all the way to 54? So this one right here is significant, the way that it has sold off. I don't know if I've seen a move like that in a long while. Because again, remember, since this pivot low at 42, it's been all up. Look at this move, 76 to 63 half, 77 to 63 half. Ken says he heard GS has been selling since 76s. It's because they've been watching the pre-market reports, probably. But you can definitely see it. It's been aggressive. This is the one shot that bulls have to defend, and if they fail, it could get ugly ahead. So right now, 62.75, that zone. We'll see what happens here in the next day or so. But anytime you stretch this far down, there's a tendency to snap back at least a little bit. So the snapback could take you, say, to 63.80. That's the previous close. And, you know, that could be something to watch out for. Let's see. So that's crude right there. I didn't think this would be as big, but we definitely knew the 76s were the key to at least 69 and as low as 66s. This has far surpassed that, and that's been a big move. So it's going to be interesting to see if we find that bottom down in this one. Let's see. So right now, Apple, just wanted to look at where it was here. It's still trading 212 half. Got as low as the 210.55. Still holding down there below the 216s. So just because it dropped like that doesn't necessarily mean it has to go lower. This could be the shakeout, scare folks out, buy it cheaper, and then it rips to the upside, right? So again, I never try to assume just from the primary direction that that's what's going to happen. But this is a pretty big little pushback right now, trading around 212s. Okay, let's take a look right here at gold, because gold's been one that a lot of folks have really been interested in, especially with this recent move down. I have been puzzled as to why it hadn't really participated to the upside as much. It's been mostly sideways. The day it found this low, we were pretty confident that was the low. I lost my confidence just before the close as this thing dropped a little bit. But it looked like the low that could at least get you back to 1240. And it's done that, but it took a long time. I mean, this used to be able to just really go when it wanted to go, and it just hasn't been able to do it. It's been very heavy. It had one big up day here. If you take that up day out, we've basically gone sideways this entire time. But it's still holding market structure. And what I mentioned to our trading room for the last week or so is that I think that gold could be the best buy of the month. So this one right here, I think, is a candidate for the best buy of the month, although it has already started to push off of the buy zone. I mentioned in the pre-market reports heading into this that 1216 to me represented a great opportunity as at least a buy to defend for a shot at pushing this thing back toward 1240. If it can push through 1240, it can start working its way toward 1287s. That is value on the higher time frame chart on a 5-year look back. That's value. 1300 is the next key level above, and that's where the sell-off started. So right now we're kind of in this rounded bottom phase, and we need to get through 1240s. And at some point that's going to happen, and this move is going to be very, very quick. I think gold is headed higher. We've had that opinion since this low. I've wanted to say that it was going to break or fail, but it has done everything it needed to do. Bulls have defended at every turn to keep this bullish. And right now it's holding to 1216. So this is where it fails, or 1210. You know, if it can't hold this pivot low now, that's where we could auction lower and things could fall apart. But that level is very important, and so far it's holding. You can see how narrow the pivot range is for the month. That right there typically leads to increased volatility and sometimes a trending month. And then you see right here that this has been trending lower and lower and lower terms of the pivot range and price action. This one is the first one that was higher, and usually that is an indication of a change of bias, and that the trend is likely going to start walking up higher off of this range toward value. So it's showing signs of strength already, obviously. Up big today. I would say tomorrow the big level for bulls to defend would be any pullback to the day's midpoint, 1227.70, into the previous high, which is whatever that is. Let's take a look at that. It is 1225. So 1225 to 1228 is a good zone there, that if price pulls back to that area tomorrow, bulls need to keep that area bid to keep an upward trajectory and an attempt to push through 1240. But overall, that's the idea. We have a great rounded bottom. These usually lead to solid moves whenever they're ready to go, but any failure at this point now, 1210, would really break that idea, and that would shift the bias to the downside. Good point here by Ken. Non-farm payroll is tomorrow morning. Again, that's going to be a level that, or at least a moment that a lot of folks are going to be paying attention to. That's going to be an hour before the RTH open. The last thing I like about gold here at 1240, it's an LVN. It's been a key level for a long time. It was the level that we could buy before. We could buy it until here, and it failed. And again, that's the level now where this thing could lead all the way back to 1360. So that is my long-term. I think this is my long-term buy. It has a great potential to go. It hasn't gone as fast as I think it could, but I think that's because it's being accumulated and held down. And I think that when it's ready to go through 1240, it will run. It will run, and I don't know if it'll stop until it hits 1360. This is the market structure that we've been working off of right here. That's the key range low, and we've just seen a rounded bottom form at that level. Man, all it needs to do is just get through that zone. I think it's clear air above. So 1287 would just be a near-term target. I think it has a shot to go as high as 1340 to 1360, but again, this would be longer-term outlook, where if you're looking out, say 3 to 6 months, I mean into next May or so, right? This is where you're continuing into the end of Q1 and perhaps a little bit higher. It could go much faster. It just hasn't demonstrated that here recently, so again, we'll see how much more accumulation occurs before it tries a move. If there's any break at 1200 or 1210, I mean, that could be significant to the downside. And then in that case, I'd be targeting 1120. I wanted to talk about Bitcoin, and then we'll start looking at some stocks here. And then I will review Microsoft and some of these others here, like XLF and CAT, FXI, and some of these others. Bitcoin has done everything that we thought it was going to do throughout the year. Since last year, it has moved exactly as kind of we thought. Now, this has been a little bit more perplexing that it has stayed down here this long, but I always say that these markets can stay range bound a lot longer than you think they can, and so that's why timing the breakout can be very difficult. If you thought it was going to break out, you know, here, you were wrong. If you thought it was going to break out here, it was wrong, or here, it was wrong. And so it can be difficult to judge that. But there's two schools of thought here that I'm working on. Number one, obviously 6K is just a big level, right? The powers that be do not want price to get below 6K. But you also have this aggressive downtrending market here like this, and it has not demonstrated an ability to push above a prior pivot high ever since the futures came online. Since these futures came online, it hit a pivot high and dropped, made a key range, pivot high and dropped, and ever since it's been lower highs. And usually that is a recipe for a downside break. Usually a descending wedge like that breaks to the downside because you need to flush everyone out of their positions, you need to scare them out, and it needs to get a big a flush move down through that zone, a big shakeout phase. And then from there it can have the potential to rally, and rally big, because now you clean it out and it opens up the upside. I still believe that that could be the case. It has to be sometimes, because this, if it's not going up, then it has to go down. If it's not going down, it has to go somewhere. It cannot facilitate trade in here for much longer. It's been consolidating around the FOMC key level from June 13th. That's been the consolidation right there, and it's just been hovering at that level. This one again seems very tied to an ETF or a potential ETF. If there's one that can be adopted by funds and institutions, this thing would easily blow up. And even if it did, what does blow up mean anymore for this one? Does that mean just getting back to 8K or 8,500? Or does that mean something bigger? So with this one, it has definitely felt the heaviness. It has not been able to lift off. We've mentioned that fact many, many times. And at some point, you got to shake everyone out if you want this thing to go higher. And I think the best spot would be 4,400. So based off of this key range right here, 4,400 is the 50%. Actually, this is the 50% level right here. So that's the 100% target. That's 50% of that range, which is where it's at. And it's either going to rally back toward that zone, or maybe it's going to flush down to here, right? Something like that. It's going to be symmetrical. So again, if it drops down to 4,400, that might be a flush enough. By the end of the day, it could probably be back towards 6K. That's how much it'd likely be bought, and then that could slingshot things higher. So again, I'm still of the opinion that this thing is stuck in the mud. It needs a good flush for anything to happen, but the powers that be are not letting that happen. They're keeping it in the range, and it's just sitting here. One thing you know though is when it gets this compressed, it's at some point something's got to give, and it's going to blow. I think we're at that point closer now than we have been, simply due to the fact that we've shifted value downward. So VPOC has been shifted to 64.36. I think that is a good thing, generally speaking, if it's going to try to go higher. Doesn't necessarily have to mean it goes up though. So that's a look right now at Bitcoin. And this is a good point right here by Victor. Could it be that the trader is just going where the action is right now, which is the NQ and the ES? I think that's big time the case as well. The ES is averaging 60 plus points per day on a 10-day basis, 63, 64 points. On a 5-day range basis, it's averaging 69. Those are average daily ranges we haven't seen in years. We're in 2018, about to be in 2019. Those are daily ranges I probably haven't seen since 2012 or something like that. I mean, it's been a long time. I was just recalling to our trading room that last summer in the ES, or sorry, last fall in the ES, you know, all of this stuff in here, these were 4.5 point ranges on a daily range basis. You know, the high is 57.75, the low is 52. That's a 5.5 point range here, and that was the average. And even throughout this entire rally, that's how it was. It looks like it was big, but it wasn't huge days. This day right here was 8 points right here. I mean, it wasn't until this volatility. So this has changed it and become much more trader friendly, but and it wasn't that way for a while. So that could certainly be the case where they've gone where the volatility is. The NQ is trading 246 points per day on a 10-day basis, 266 on a 5-day basis. That's pretty big compared to what it had been trading, which was like 60 to 80. And again, we can quantify that down here. So let's take a look at that real quickly. You look at the NQ. This is what this indicator is down here. I call it the PivotBoss Advanced ADR. I can tell it how many days to measure. I drop this down to a 1 day. Click OK. And then right here, it'll tell us what the average is. The gold line is the 5-day average. The gray line is the 10-day average, so it's averaging 239 points. And this is what today's range was, which is 143 points. Now, if you look back just a little while back, over here, say, the average was 91 points. Right now, we're at 200 something. Look at how that thing is increased. Now, one thing about volatility is that when it's compressed here, it suggests that you're going to see an increase at some point, and after it's seen an increase, it usually sees a decrease at some point. You know, it's a crescendo type of effect here, and then it drops, and it goes here, and then it drops. So right now we may be in a portion here where we could see the daily ranges come down as we head into the end of the year, which would be normal, because at around 12/15, December 15th, everything up to that point there's volatility, and then everything after that point is zero volatility for the most part. So that they're going to turn off everything at around that point in time. So right now, again, high volatility state, very, very good for the most part, but you also have to be very, very mindful of your risk. That's a big deal right now. Okay, let's take a look at some stocks. We have XLF. I guess technically this is an ETF, not a stock, but here's XLF. This one had been a favorite ever since it's been bouncing off this low. That's the key range I have for it here, which is basically the 30.33 high, the 27.17 low, and the 28.75 midpoint. That gave us a great key range. Right now we're testing a 25% expansion from below. We're right here in this zone, and a lot of these markets look like this right now, and I'm trying to figure out whether to trust them or not. This has been a very bearish sector of the market for the most part, and we're coming into 26.5, which is a key level for us. It's a CLVN in the chart. Better CLVN is right here even, and that's where it bounced from. But you can see all of this right here. This is where the action has been, and we're retesting it from below. That's the level. That is the pivot. So if this market finds acceptance above 26.5, odds favor a move back toward the top end of the range. Maybe not this range up here, it's this range right here. This is the range that matters. This is premium, this is normal. So 26.5, 28.75. So 26.5, above that level opens it up to this portion, because that would mean all of these late shorts got squeezed, and now it comes all the way back up, max pain. Obviously, we're retesting 26.5 from below after a breakdown. So bears are trying to keep it offered for another rotation downward. That's what's trying to happen. Whether they succeed is another story. But this 26.5 is the key level to watch. Right now, an inside day with a price close above yesterday's mid. You typically don't want it to close above the mid if it's going to remain bearish in this case. So just a couple of thoughts on XLF and some things to look for, but again, above 26.5 could be pretty significant in this one. Let's take a look at the next one here. It was FXI. Great move out of this one. Bounced off the 3802s, which is a CVPOC from the higher time frame. Now, I have been very hesitant. Obviously, China had a very good day today. If we bring up Visual Trader here and just look at the groups, China's back here, and look at every stock in that group is just huge today, up big. If you look at the by groups over here, China led as a group by 8% on average, up for all the components in that group. Now, I custom created all these groups, so they're going to be different than what might be standard, but this has a lot of stocks in this group. And here you go. Look at all the stocks that I have in there. Anywhere from 3% up to 17% up. In most cases, that would be bearish in this market. But is this the one that changes the tide? You know, 17% for VIPs, that's pretty big, but this one's gotten crushed. And I've been of the position that I have been hesitant to recommend buying this group, just because of the tariffs. Now, unless something has changed regarding tariffs, you know, I don't know if anything fundamentally changes. This could be a counter trend bounce in a downtrending market. So, I like the idea, and one thing I did want to mention is I wanted to discuss a little bit about group rotation and then that type of analysis, because this is the time where it's happening. You know, groups don't stay in favor all the time. right? This one was in favor all of last year, where this was just a straight rally, and then at the beginning of the year just out of control. It was in favor last year, but just because it was in favor last year doesn't mean it's in favor this year. Folks take profits, they maybe start to short it, and then the money rotates out of this one here and then into a different sector, right? And that's just constantly what happens. Well, with the recent drop that we had over the last few weeks in the month of October, fundamentally so many charts broke while others maintained their market structure. Others outright rallied. I think there's going to be a great shift to some of these very soon. China will be one of those that I will definitely be looking at. Is this the bounce that will start the move? That's the question. I don't know if that's the case, but it could certainly be a dipping of the toe type of opportunity. Another idea is EEM, where you have the emerging markets. Again, this one's gotten beaten down a lot. But I know money managers and have heard many portfolio managers that have been, blindly buying this one on every new low just because it is significantly discounted compared to the market. And that is a value trap waiting to happen time and time again. Yes, it's been going up, so this looks like a value and a bounce. It looks like a value now. Oh, it's a value, it's a value. Yes, it's going to continue looking like a value all the way until it's here. And so they're getting in way too early. And they're building positions and averaging down, but at the same time, it just fundamentally, nothing has changed until something changes. And so, again, I'm generally been bearish emerging markets and the group of Chinese stocks that we've been following. But these counter trend bounces have been very playable, even as short-term moves. And I would say if you have profited on some of these bounces like this, I'm always a fan of taking profits, at least on a partial position, and that way you're taking some cash right there and then and reducing your risk exposure and doing exactly what you're supposed to do as a manager of your money. So yeah, that's a look at a couple of those. Baba has earnings. So this one was up big. Of the ones in this group, this is my favorite one. So this is before the market opens tomorrow. So tomorrow morning there will be earnings. And I like this one a lot. Again, I don't know how earnings will do based off of the whole tariff deal and how that will impact or affect their business. But breaking down below 163s was crushing because this was one of the most reliable bounce levels around. The last time I played it was here, took it off on earnings, but deciding not to play this time around. The trend has been down. It's been very aggressive. Even with this bounce today, we still haven't broken market structure, even on a short-term basis. It's a great failed new low. It's a great bounce. It could turn things around. It needs to get back above 150 and hold overall. I mean, it's there right now, but it really needs to get above that zone. I like this one the most of any of the ones to get back into when the time is right. I've just been very patient on this group because it just, until they announce, I mean, this thing could just continue to get crushed. The downward trend has been very powerful. Here's Caterpillar. Got a nice bouncing cat here recently. This one sold off hard, right? We had a buy on this one. Well, several buys throughout the year. This key range was our signpost there to buy it, right? And then over here couldn't hold. Then it formed a box and eventually went. And it got a little hairy over here where that price failed new high and bang, 112s, like just crushing move. That's a crushing move, 158 all the way to 112, right? And it happens in a couple of weeks. It's just the bottom came out of that one. But it came out right where it should have come out to. And again, you can see right here, there's a big volume profile this way. And you can see that encompassed all of this trading. And then there was this ill-auctioned price action that took prices way up. This is the distributive phase. And then it's going to take prices all the way back to that point of origin. And you can see the this profile is very thin over here. And this is after auctioning all this, and all the way back down. So it did exactly as it was supposed to do. It cleaned out all the way back to about 110s, that gap support, and now it's bouncing. With this one, it has a shot to bounce back toward, again, in this narrow hallway right here, back toward 130, 135. I don't know if it changes course much more than that, because it really needs to get back above the 135 zone here in order to change that path. Now this is such a big impulse move that perhaps we can get a bounce all the way back to that midpoint, right? And that would be a new key range. So the best I think this one can do is getting back to about 135s in the near term. But that's been quite a collapse that we've seen in that one. Here's Microsoft. Microsoft is one of my faves for the longer term. I really like this one a lot. And I think over the last 2 years really has surprised me the way this one's moved. I mean, I've never seen Microsoft move like this in a long, long time. Since the 90s, it seems like. It's done quite well. And the last time it pulled back pretty significantly, which was earlier in the year, this would probably have been more significant here, but it was early in the year, it held pretty well. Failed new low here and then embarked on an uptrend with the rest of the market. That's pretty strong. We're in that same type of phase right now where we're trying to find that strong low. I think where it bounced off of, which was a clean 100 hit right here, that's about right. 97.5 to 100, that's a good area right there. You can see all this action. This is where it held. That's kind of the battle zone right there. That's the line in the sand that you want to hold that, because a failure to hold that level, that's when you start coming back toward 85s, 90, and then 85s. But holding this level after going sideways and then perhaps going sideways some more, I think eventually leads to much more strength to the upside. So I think 100 to 97.5 is the big pivot zone to watch for this one. Generally speaking, the trend is up. So if you look at this like that, it's up. That's not a good line. Something like this. And so maybe it has a shot to really rally like that, especially if it can start getting above this portion of the chart here. 110s, man, that could open it up to the upside. So I really do like Microsoft. I think that whenever this market is done shaking out, maybe it has already finished done shaking out, maybe it has another leg coming, who knows. But when the dust settles, I think everyone's going to come back to strength and leadership, and that's Microsoft. I think that's exactly what's going to happen in this case. So we will see. We will see how this one goes. Right now it's trading 105.9, 105.39, 105.20, somewhere in there. So I do like this one a lot. And let's go through, here's S-Bucks, Starbucks. So Starbucks here, 64 bucks right now in after hours trading. Obviously earnings coming out right here. They beat barely 62 versus 61. So right now they're trading right here at 64s. There is 64 even right now. If you want to look at the intraday chart, you can just see what it looks like. There it is. Bang, way up. 64s at the moment. So let's see what 64 looks like higher time frame, because I have a key level there and it's the upper end of the chart. So if you look at this from a longer term perspective, over the last 5 years, this is 4 years, 1, 2, 3, 4, over here to here, right? That's 64s and that's 50s. The one time we got below it, it came back in. The one time we got above it, it came back down. And right now we're here. So with earnings, we are sitting right here at 64s. We haven't been able to get out of this range in 4 years. Eventually, I think this has a great shot to see more expansion. I think a lot of these are seeing more expansion into some of the Asian markets, and that could be huge down the road. And then again, I don't even know if Starbucks has even talked anything cannabis or CBD related, but that would be a huge compliment for coffee, and that could be something down the road. So if you look at the weekly time frame for Starbucks, the trajectory still looks like it's higher. This could be a giant distribution phase after a major rally. I don't see that happening right now. I just don't see it happening. Anything can happen though. And when you're at 64s and you're at the highest price you've ever been at, I can imagine in the current climate where perhaps some of their other positions haven't worked out and this one's been going up, I can imagine there could be some profit taking tomorrow. So buying 65 puts, for example, might be a way to capitalize on the pullback that you could see. Now, I'm not saying we pull all the way back to 50, but let's look at Netflix. Here's Netflix, and let's look at the daily chart here in Netflix. They beat on earnings, 89 cents versus 71. The next day they gapped up. Actually, they gapped up. They were up to about 405. But by the time the open came around, it was about 380. And then it just dropped down to 270. 110-point drop there. So, if you look back at S-Bucks right now, Starbucks, we are about to open up, or if the market were to open right here where we currently are, it would be right at 64. Again, is that an opportunity to start fading back down? Is the best spot to sell on the entire chart. So it would not surprise me if profit taking were to occur. If that's the case, 65 puts might be a great way to go as a way to take advantage of at least the short-term pullback. So that's one to watch here from a longer-term perspective as well. Why is this not a sell? Well, yeah, I mean, buying puts is kind of like selling it, right? Was that the question? I definitely think I mean, profit taking is selling, so I definitely think that that's what could be happening. Absolutely, back toward value. This one might be overdone. Let's see, McDonald's. McDonald's has been strong. I've been very impressed with their performance here, especially last year. That was just atypical, it seems like. This one had a massive sideways phase for 4 years before it rallied here over the last couple. So again, it doesn't have to get outside this range. A lot of times when you have a massive rally like we had in the past year, there tends to be a digestive phase where we rally, impulse sell-off, key range, and now digestive phase. And the edges are usually to be faded right down here, and eventually we'll see a breakout either down or up, one of these directions. But you can tend to see quite a bit more range-bound action than you think you can. I mean, we could see another year inside this trading range. It's 154 up to 178. I mean, that's a big market for the stock like this. The uptrend, I think, remains intact. It's hard to say buy it at these levels, but we've had it long, you know, off these lows and up, and you know, it's been nice so far. It's been one of the most bullish out there in this market phase. And if we do see a broader correction, bigger than what we think we're seeing right now, this one would probably excel in that environment, which is why it's probably seen strength in October while everything else has seen weakness. Same thing for something like, say, Procter & Gamble. Again, this is a flight to safety type of trade. If everything else is selling off, people go over here and start buying Procter & Gamble because you still got to buy toothpaste, right? You're not going to stop buying toothpaste even if your stocks are gone. Well, ideally, some people probably don't care, but I mean, yeah. So this is one of those ones that's going to pop, and so PG, MCD, some of those are in the right zones that if we're seeing weakness here in the broader market, managers will flock to these as a safety portion. With PG, you still have a little bit of a gap fill back here as well, so we could still have a little bit higher. So Apple's at 209 right now. Toilet paper defense. Max is funny. 208.90 at the moment. 208.90 down here. That's a big move right now. Again, that's going to be impacting the NQ. So the NQ to some degree. Right now trading 70.29. So again, it's going to be interesting to see how that plays out. IYT was one that we've been looking at for signs of movement ahead of the market, and it's been great. I really picked up on this one in this zone here as a buy, and then a sell, and then a buy, and then up here it was a sell right there and here for me ahead of the big move. And then down here at this lower edge, this was a spot to watch for rejection. And it has bounced convincingly from that area. Like, that is a very solid bounce. And again, is the market, after the big move that we just saw in October, is it going to lead to a sideways type of move in November? Or is it going to lead to, you know, just some kind of pullback from where we are? It's going to be something to keep an eye on, but I think this one has a shot to bounce to 192s overall, as high as that. But this one has been a really great one to watch, again, as an early indicator of where markets are likely headed. So keep that in mind if you're looking for something like that. IYT is a good one. Let's see. I have some long candidates here that I've been sifting through. Some pretty decent ones here, but we'll check some of these out. BRO. This one's had a great uptrending move so far. It's holding 27 halves. You have a kind of a failed new low and a very tight little range here. A narrow 5-day range has developed. It has had an uptrending market here, and then this thing has a lower value now. But the way that it treated the first trading day of the month here suggests that we could see a pretty hard squeeze back up. This is one to keep an eye on, especially if you can keep above 27.50. Not one of the better ones here, but something to watch out for. I do like ZTO as well. This one has bounced off of support here. It has support at 14.50, higher support at 15 bucks, and now taking this area bid. This one, the way that it started the month here, suggests a change of trend. So a change of bias in the trend. It has been going downward, and then it closed above this one. And the way that it's taken everything bid with a failed new low, sometimes that tends to lead to a bounce of some magnitude, perhaps as high as the 19 LVN. So this one looks fairly solid for a near-term bounce. That's ZTO. You also have EOG is one I've been looking at here. This one had a failed new low today after a strong pivot low off of 100. Earnings out right here. Let's see. It had 175 versus 159, so it beat. Current price is 106.85, so it hasn't really moved a whole lot right now. But this one is, again, near recent lows here, 100 bucks, 98s. And after a big sharp drop, at times there tends to be a snapback reaction. And when you get these snapbacks, you can easily come back to the prior pivot support right here. So if it drops like that and you have a failed new low, this could be a great one to send back toward about 114s. So this is one where, again, if you have a great rejection here, you could be looking at an in the money call, or perhaps slightly out of the money to be cheaper, and then this thing can push higher. Perhaps even a call spread in this scenario would be good, because you can go, you know, support as the sold call, and then you can have the bought down below. Here's MU. Let's take a look at that MU. Now this one's strong too. Again, when you mention MU, it's a heavily owned issue that has not performed well, and so a lot of people are just not happy with this one at all. It's been one that had paid for a while, and so when you have something that goes from, you know, 10 bucks and it rallies to about 60, You know, people, they're very, very happy. So then to see that get cut in half very quickly is not very good. I mean, that's significant. So I would imagine that at some point you find a strong low, people come back in. I think that's what we may have done in this case. And so Brett's asking a good question. Is it a pinball or a trend change? And right here, getting back above the 38 or 37.50, back above that low and that zone, I think is very, very important right now. It drove down below it very sharply, but now it's come back above it. And now if it can hold the 38s or 37.50s, I think it has a good shot to bounce and change the trend. And if it does, I mean, I'm not thinking this thing goes to the moon. I think 50 bucks is probably a good longer term target, because we're talking this distribution, and to get back inside that distribution again would point to this level. So that's as good as I think it could do. And you're right, I think the 38 hold would certainly be what you're looking for in this case. It's got to hold that zone on the pullback, and then this thing can race higher. But in terms of changing the bias of the trend, it just needs to really close the month above that level right there, which is the midpoint of the recent sell-off, and that again opens the door to more upside. So closing above 40 would suggest again maybe some more upside. So this one looks pretty strong. I bet some folks are really happy about that one here. Let's see, XPO is one I was looking at as well. This has a sharp rejection off the lows, really, really sharp rejection. XPO Logistics, you can see right here, 80 bucks, really, really strong level right there. You have market structure below it, and then you have everything else above it. That's a strong level, and if it can continue to hold 85s, I think there could be a pretty solid snapback toward 95 and maybe even as high as 100. So this is a good little bounce here, and one to watch on the long side. But price needs to continue to hold and close above that dot right there, which is 83, call it 84. And so that, if it can't do that, all bets are off. So that's the case with many of these ideas. When I look at them, I'm looking for major rejections, major composite lows, major market structure or failed range expansion type of scenarios, and then it has to hold that level in order to earn the right to push back toward our target. So this one looks really good. Keep that in mind. I also like MasterCard. MasterCard is one that is kind of like Microsoft. So if you heard the Microsoft analysis earlier, copy and paste that for this one. It's very similar. The last 2 years have been stellar. This recent pullback, while the market has really gotten hit, this one held its own and held market structure. Here's the 182s or so. Look at that. It held that zone. It got a little lower, but that's okay. And that rejection right there can easily lead to another round of strength. Again, it's a Thursday right now, so we don't know if the weekly bar is going to remain intact. But if you look at the weekly bar, look at this right here. Look at that rejection. This is a major rejection right here, rejection tail. We're still not done with the week. We got one more full day to go. But look at the midpoint. The midpoint is right here where those prior lows are. That's fantastic. That means next week we could still come to that area, and that could still be a great area to buy for a continuation higher. This looks really, really solid. So for those of you that like a longer term candidate here, I like MasterCard. It looks really solid for the longer term outlook. And even in the shorter term, again, any pullback, say to 195 next week, could be a great hold for a continuation. This one looks good. I'm also still holding Tandem. It had earnings today. Let's see where it's at. Right now it's at 41 and change. It looks like 41.45s, or it's hard to tell right now. Maybe 40.88. It's in the 41s right now. So this one's been really good. I mentioned before that I believe that this one was outperforming the market down the road, as well as, you know, even it had already outperformed the market this year, going $4 to 52 bucks this year alone. And then it came back to market structure at 30 bucks. This one's been a very good one overall. and to hold above 40 would be a big deal in this case. You know, we have this kind of move right here where you have these three pivots, and then it failed here on a lower high, or sorry, a higher low. Earnings today. So I have I had calls, puts. I also have shares. I had the whole gamut on this one, and I've been taking profits where I can, and still holding some of those calls. Took some profits here today. Those were 35 calls, still holding 30 puts just in case, and those were out of the money and much cheaper to protect against the shares overall. But this one has been a good one. I believe that this one has a good shot to double in the next 6 to 9 months, and that's something we've been talking about here in the room for a while. If it could get back to 30, I thought it had a good shot to get to 60. I'm in off the 35s, and the 70 level was my primary target because it is also a key range target. So you can see right here the 150, that's really the 100% expansion from this range, the key range. And to reject down here, which is what we were playing, would suggest that we could eventually see an upward continuation toward that target. That is 69.88. From 35 to 70 would be a double. And again, anytime you're playing something like this, you know, anytime you have a double, you take half your trade off, and then you keep the last half as a free trade. It could go all the way down to $0 and you lose nothing other than what you had built into it. But I mean, it could be a free trade other than because you're taking out your investment right away. So that's a good way to play some of these candidates, especially cheaper candidates that you like. For this one, I think it has much more upside, and that's only on the short-term time frame. Look at the weekly chart. This thing came down from 300 bucks. I'm not saying it's going to go back to 300, but it could easily get back to 80 or 100, right? If it came back toward these lows here and these pivots here, and we just saw a major accumulation phase and the first wave up, I mean, I think you could easily get to about 80 to 90 bucks. We're currently trading 40 bucks right now, $41. You could still double this thing to 80. So I think this has a great long-term outlook. If you look right here at the weekly chart, we had a rejection tail here, a hold, kind of a close just below the mid, and then a big stop run here that's happening this week. Again, this could be a recipe for much more strength down the road. So I will be holding for this as well. Let's take a look at Nvidia. So Nvidia has been wild. You're right. It's Nvidia's been a heart attack lately, says Brett. You're right. This one has been nuts. I have held off of this one for a while now. Something fundamentally changed and it got ugly fast. I mean, this is an incredible move, and you're seeing this in many different stocks across the market. The baby seal pattern is complete. Every time you say it, it's so funny. But yes, this one right here, I mean, just got crushed. Just crushed. Forced a lot of folks to tap out. You know, 210s, 200s, major support and market structure for so long, and it took it out. And so upon taking it out, some got in much better and now have a much stronger hand. And I think this rejection is not bad at all. The sell-off is so aggressive. I think we complete the midpoint retest on this one and get ourselves a new key range. So what I mean by that is this is the pivot high, that's the pivot low. We bounce back toward the midpoint, which is that level right there. And that level is 234s. 234.39. So we still have more upside to get that level. I think we get it. And then this would be a large key range, and it's going to rule the next major moves in this chart. So whenever you see a range that size, a sell-off of that size, my initial thought is that we're about to go sideways for a long time. But after a bounce. So you bounce a little bit, you know, back to the range where we talked about, and then now that you have that large key range, it could be this for a while. Because remember, this one hasn't always been the huge stock that it is right now. It just came from 20 bucks a share, 30 bucks a share just 2-3 years ago. And it's had an aggressive pace. And now it's the new normal. And I think you're going to see some digestive phase here. But first, perhaps a bounce. So for Nvidia, this is such a big move. Anytime I see a move that wide, I think that we're likely going to bounce and then go sideways for a very long time. Oh, thanks for the Apple link there. So Tim Cook guiding down Apple sales in China. And so are we dropping even lower here? Currently trading 207.33, 207.20. We got to a low of 205.16, 205 right here. So we just barely took out this low. This is going to be interesting tomorrow. Very, very interesting. Again, I want to look at the NQ here and just see what it's looking like. The NQ is trading 70.29 still. $70.27s I have. Yeah, this is going to be very, very interesting. It's just sitting right there. Yeah, it's closed right here. So again, these markets may not be done going down. We have some long candidates here to watch. I also wanted to provide some short candidates that we've been looking at before we close up here. And if you have any other ones that you'd like me to go over, now would be the time to just put them out there, and I'll give you a quick rundown here. But for the most part, the sell candidates have been pretty good up until the last few days, obviously because it's a counter trend phase. One of the ones that I recently took some action on is CNC. This one is a great one in that it had a major uptrending phase, really broke down big time through 138s, and then this retest at the pivot range looks quite bearish. And so at the very least, after you push higher like this and hold that breakdown in this retest at the pivot range, the first one usually leads to a pretty solid move lower and at least a retest of this low. I'm in the 135 put right now, and you know, again, looking for a push maybe somewhere between 120 and 122. The kicker is if price pushes above 2-day highs and starts to push through that zone and hold and find acceptance, the trade's over. So in this case, it's a very short-term oriented trade. This is not one where I think it's going to keep on going all the way. It could certainly drop off, but I'm looking at a 1 to 5 day type of move out of this one. So putting that one in. Let's see. I was looking at XRT. No, that's not one. That was another one here. Here's Twitter. Twitter's coming up against 36s. I don't think this is ready to go down just yet, but it's in a spot of the chart that would be the best spot to sell if you wanted to be bearish Twitter. You can see a giant head and shoulder type of pattern. Obviously that looks ominous, especially if it can break 26s, but for me it's really the 36 level right now, and we haven't quite hit it on this rotation up. We could certainly get above last month's high here, that blue line, test it, and if we can't hold above 36s like this, we come right back down to 26s just like we did here or just like we did there. Are we about to do it again? So this is one to watch. It's not quite ready just yet. I think we have another push higher that could happen, but then if it can't hold, that's a great shot down. If this thing were to say open with a gap below today's low and opens down here, perhaps it's already going to go. So I think this is one to add to the sell watch list in case we turn down. This could be a pretty decent one here to keep an eye on. Oh, let's take a look at a couple of these. OSTK. So here's OSTK. This one has been trending lower. This one got crushed this year. It came out of nowhere last year. I remember looking at this one last year and just thinking, how did I not see this one? Because it was just ripping higher. And then it's given it virtually all the way back. The 100% target is 17. What is that? 1788s right here. That target is based off of this key range right here. Impulse move up. And it's held the bottom of that key range and it's worked downward. So it's almost done crushing the souls of everybody that's kind of been in. I know it had a big update today, up 7%. It's a good start to the month. But when it's a dog like this, it's kind of like you have to show me. You got to prove it to me. Otherwise, more of the same. We're in a good spot though. So the dip to toe is coming, right? This spot right here was the highs, and that's about 20 bucks. This is where we're getting the most significant bounce from right now. 1788 is kind of that target right there. So we're in a spot here where it's not a bad idea to start dipping the toe and see if this thing can go to 30. And if it can get above 30, you start to work again back up towards, say, 42s, right, the top end of this range. So that's kind of the if then else statement right there that I'll be using. Let's see. Here's 6E. Now some of these turned off their pivot highs or lows here today. Like dollar was up here rejecting off the high, as this one was rejecting off the low. These ranges have been very, very clear for the most part. Look at the 119 to 118 half zone down here, the 113s halves, and so it's been a really nice move here back and forth. Overall, this has been a major sell-off there, and it's been holding at these lows. I think it's gone sideways long enough, and it probably will start to see some sort of expansion out of this range soon. If it can't hold this low, I mean, how much more does it go? I think we probably stay in this range a little longer, but we're probably closer to that breakout point than we were before. Obviously, we've gone sideways quite a while. I don't know how much more of a bounce we get here, but it could be pretty decent in the near term if 114s hold. So for the very short term, if you're looking at this thing as a bounce candidate back up, that's the 114 level. That's the level to hold tomorrow and any of the next couple of days. It's kind of like that pattern right there. It held it and then it rallied. So if it pulls back tomorrow, if it can hold that zone, there's a rally in this one that could take it back up some degree. From this low right there, our high probability target zone takes us between 116 and 117. Oh, Ken says here that Apple will no longer provide sales numbers to their units going forward. Interesting. Yeah, that usually doesn't sit well, I don't think, with regards to price. Fortinet. I like this one a lot. I think this one's taking a gap down right now. We had earnings. Let's see, earnings came out 49 versus 45. It's currently trading, is that 78 half? Looks like it's at 78 half right now. 78 half would take it about right here on the chart. That's not the best scenario. Now, for those of you that are in my trading room, you've heard this before. If you're not in my trading room, then you'll hear it right now. I like this stock a lot. I think it's just like a tandem where it has a good shot to continue higher and a good shot to double from where we are even now down the road. 9 months out, 12 months out. This has a good shot to just continue plowing higher. In a very bearish month of October, This one maintained some good market structure, maintained a gap breakout. It's now consolidated here and looks poised for a major breakout move. I like this one a lot. Obviously with earnings it's going to perhaps take a gap down unless this thing bounces here in after hours trading, but if it takes a gap down and leaves this as a little bit of an island, 75s may be at risk, and that's where you start working down into this gap. It's basically the Apple effect. This trade is almost like Apple. It's just like Apple. It's been up, it's holding right here, it had earnings. Does it continue this way, or is it about to get crushed through 75s? And I do like this one a lot, though. I do want to find an opportunity to get into this one again. Hadn't done anything in this one in a while, so looking to see if this thing can show some additional strength here, or if we can get some rejection at 75. So that's a good one. I really like that one. Adobe has been quite bullish overall. It has not been really dealt a bad hand like some of these other stocks. I mean, they've really gotten crushed. This one is held up here at these highs just like some of the better stocks have. Adobe and Apple and some of these that are just holding up here. Tandem, and obviously these are bigger ones than Tandem, but they're holding and maintaining market structure. It's very bullish. The one thing I would caution is that when you start to see rounded characteristics at the top end, that's where you really start to just be cautious of a potential break of market structure, because that will tell you that these longs aren't getting paid, they're not getting paid, they're not getting paid. That creates the rounded structure, and then everyone's stop is right here, and then bang. I don't think that'll happen here, but it doesn't matter what I think. It matters what the market does. So I have a bullish bias on it, but that's the level that if it's crossed, good night, because you probably come back to about 180. So I think generally speaking this one is bullish, but you know, anything can happen. And right now we're dropping down as we speak. I believe we're at, it just hit 242 right now. And again, another look at Apple right now on the way up. Not a bad move so far. Again, with this one, with the way it's moving right now, it's at 207. If it looks just like Fortinet here. If this thing gaps down and leaves a little island here, how aggressive will it be? Will it be a one-day move that just takes out lows? Or will it be a move that fills the gap and then just starts to run back up? This is going to be very interesting. That's why all eyes are on Apple and have been, and that's why again I've taken a more cautious approach to this one and the broader market at the moment. So this is going to be interesting to see how it goes heading into tomorrow's session. I wanted to bring over really quickly here, for those of you that aren't familiar with my site here, this is PivotBoss.com here. You can go to PivotBoss.com and get free pre-market videos every morning. I also put them out in the tweets. They're in the news section here, where if you click that, it brings you down. These are usually anywhere between 5 and 8 or 9 minutes long every morning, where I cover 4 or 5 different futures contracts in the market and what we're doing. If you want a little bit more idea of what we're doing in the trading room, you can click on the premium trading room here, and you can go to a trial offer page. Only 19 bucks for a 2-week trial. After that, it's only $99 a month, and so you can choose what you want to do right here. Again, in this room, we engage all levels of all the different types of instruments and all different types of time frames. We're looking at stocks, futures, crypto at times when it's moving. Right now, it's not quite moving, at least not Bitcoin. And then we're also trading. I trade options, futures, the actual stock, shares. It doesn't matter. I'm in it all, and really engaging the market every single day with those that are in the room. Very knowledgeable traders in the room as well. So if you want somebody to hang out with and have a great trading community there, again, a good small tight-knit community here where we just look to engage the market every day and place trades. And again, that's a great resource here where you can check it out. There's additional resources inside the premium trading room. You can also take a look as well at the offer on the front page here. This is Swing Trade Pro 2.0 was officially launched and is has been well received by those who took the course and also took the live training that came with the course. That has all been recorded and put on the dashboard as well. And many of the trades that we took during that time worked out fantastic. So you can click to learn more about STP 2.0 here, and that'll take you to a page where you can check it out. So that's pivotboss.com. If you look over here, some of the trades we took during that time were pretty cool. I mean, the very first one was GoDaddy. That was during the big push up, the initial push up, a great rejection here. Got in at the end of that day, and then enjoyed a huge rally the next day. It was one of the biggest up that day. Took off most of the profits that day, and then took later on took the last off for a small gain. But for the most part, that was a great way to start it all off. Another one, which was a good one, was CVS. This was one that really sold off significantly. Again, found that one right here at this rejection tail. We entered at the top end of that bar right there, just like in Swing Trade Pro would say, and then as the thing dropped, took profits along the way. That was a great one from the room as well during that time. We also had things like AMCX, you know, which I mentioned at the time was likely to bounce, and I was looking to get filled on a spread that would have taken us up towards 65s. But this one never filled and never quite worked out against according to our rules, so no dice on that one. And so we talked about each of these ideas and how we would engage them, and we transacted orders on some of these as well. TXT was another one that we looked at as a big sell candidate and a likely continuation lower. You can see it's been down ever since. And so again, we found some great candidates during that time. You can watch that live training as well, in addition to the training that's already on board. And again, that's Swing Trade Pro 2.0. So a lot of great content there for that one. And again, you can go to pivotboss.com/Swing Trade Pro 2, and you can learn more about that as well. So a great resource here for those of you that are still learning and trying to become more consistent in the market, but is also very beneficial for those of you that have been experienced traders as well. All right, everyone. Well, I want to say thank you very much for being a part of the room here today and the monthly market outlook for November. As always, I appreciate it, and I look forward to seeing you soon. Please let me know if you have any questions, and I'll look to answer those for you. All right, everyone. Oh, the Powerball numbers, Victor. Yes, I needed those. I wish I would have had that 1.6 billion, right? One person won that one. That was incredible. I think they got like 900 cash value or something. That's incredible. We'll try to work on that for next time. All right, take care, Bill. Good to see you. Victor, Rich, Vic, Ken, everybody, thank you so much for being a part of the show here, and we'll be back at it again soon. Take care.